Today, I want to tell you about a very interesting strategy that will greatly help you understand market trends better and achieve very surprising win rates. So before anything else, like this post, and hit subscribe because this strategy and the strategies I'll soon share with you can significantly increase your profitability. Today we want to talk about divergence and examine it in a different way to see if divergence with the method I'm going to tell you can increase our profitability or not. Throughout the years of my activity in financial markets, divergence has truly been able to provide me with very good profits. And it has always held a very special appeal for me in stocks and gold. It doesn't really matter whether you want to use divergence on lower or higher time frames. Chaff, well, you choose based on the time frame you have, and you consider certain parameters for yourself. If you are going to use it on a daily time frame, well, the profitability is much greater, and you could say you need to set larger stop losses. When we move to a lower frame and trade in a scalping manner, well, certainly, the profits we gain are lower, and we also consider lower stop losses. Before we go into divergence and examine the method, I want to tell you about why, which differs from the simple divergences we've used before. I'll give a brief explanation about divergence. If we come to the indicator, to add it to the chart in the school of thought, well, when we added the MACD oscillator, we noticed that while the price increased, the MACD oscillator showed a decline. This means that exactly at this level, we observed the price going up, but the oscillator was placed in the lower region. And this is considered a negative divergence, or negative divergence for us. Well, we also see a positive divergence here. We can consider this as a positive divergence. Now, it's true that the price should have come down a bit more. And as you can see here, the price has almost come down. But in the oscillator, we experience an increase. And as you can see, there is a price increase after the positive divergence. So in general, we became familiar with divergence and how to identify it. I think many of our friends who are with us were already familiar with divergence. But the important point is how we can increase our win rate and profitability from divergence. What we can do is visually look for divergences and then proceed based on the principles that I will explain to you shortly. Check to see if the divergence is really definitely correct or not. Personally, in my opinion, I prefer to use the divergence for many indicators. Indicator, and make sure you have version 4, which is used by approximately 18,000 people. When you add the indicator to the chart, as you can see, it shows us the divergence based on different indicators. Before we continue to look at the strategy together, I recommend that you definitely visit the channel. We have placed very attractive strategies in the channel, for example, my personal strategy, which I think can be interesting, and many of the two friends are using this strategy and are achieving very good win rates. Use it. I have placed various strategies based on different methods on the channel that can really help you increase your win rates and achieve very good profitability. Personally, I believe you should definitely watch the strategy you become addicted to, because it can truly increase your profitability. Also, make sure to watch my personal strategy, where you can earn 30% daily. Well, after we added the divergence for many indicator version 4, as you can see, it comes and gives us different angles based on various indicators. And if we want to look at it from Mahdi's perspective, right here, if we look at this point to this point, let me remove this thing now. You can see that based on the MACD, it has also come and indicated to us that we have a negative divergence here, and the price itself experienced a drop after this divergence. My recommendation is that when you are using this indicator, make sure to use one of the oscillators like MACD or RSI, and I don't really recommend using others like stochastic. The next point is that you can go to the settings section and increase the pivot period to catch those very subtle divergences that might occur. We can eliminate potential false signals by changing the number to 10. Some of these divergences that were present in smaller time frames and pivots will be eliminated. Well, when we look at the chart, we notice that the number of divergences it shows us is quite high, and the main reason for this is that we are using a pivot period of 5. If we change this to 10, the number will significantly decrease. I believe that this is because you need to remove the pause, the use of Iran and other elements. So how can we increase our profit using this method? In previous posts, we also talked about market context and mentioned that market context is truly the most important thing we can use in the market. Here you can see that we have a movement. We had an upward movement whose strength is significantly decreasing. And if we look here, we see an upward movement, a small correction, another upward movement, which is considered a strong upward leg, and larger corrections compared to this correction. Our upward movements have less strength compared to these upward movements, indicating that the market is in the process of reversing. So in the area where we also have a negative divergence on the indicator, and we look at the market context, our upward movements are losing strength, which signals us to take a position. We take a position when we have a key bar, a signal bar, and a key bar, and exactly this has happened here for us. So here we have an important key bar and a signal bar, and we can take a short position. In this particular scenario right here, an important point about this strategy is that when we take such a short position, WAM in this area specifically mentioned earlier on, it is crucial to place an extremely close stop loss so that if our assessment happens to be wrong at any given moment, then consequently, we exit from the market with very small losses. And I usually or typically set the take profit at 3, and when we generally enter a downtrend, I try to trail along very carefully with the downtrend until I receive strong signals from the candles or the oscillators I am currently using. For example, here, as you can clearly see, we took a short position, and on the MACD indicator itself, we currently do not yet have an exit signal at this moment. Until this area, when we enter this area, can we exit our position here? So the most important point we have in taking a position based on this strategy is to look at the big context. Is the trend we have really weak or not? If the trend is still strong, we should never take a position based on divergence. If you've been with me up to this point, be sure to subscribe to the channel for very interesting strategy content. We post engaging content on the channel that can enhance your trading. And please like this post as it gives me a lot of energy. Okay, let's look for a position where there is divergence for us, but we don't take a position there. An example here is that although if we look at the ON chart, based on the oscillator itself, it is clear that we don't have a divergence here. But if you want to use just this indicator, if we look here, you will see that we have a negative divergence here. But the important point is that when we look at this candle, it shows that the strength is very high, and it is not at all comparable to the previous candles. We would never take a short position here because the candle present here is very powerful, and if we were to take a position here, we would most likely exit the position with a loss. Let's also discuss an example of positive divergence. Here we have a positive divergence on the indicator, but generally, as you observed, when we use the MACD, it is quite clear that when we look at the oscillator value has decreased. So this is not considered a positive divergence for us. Now, if we want to look here, as you can see, here we observe an increase in the value itself. We had the oscillator itself and the price has been almost decreasing. As we look here, we see a very self-declining trend. The upward trend, the declining trend, you could say it has decreased itself, and You could say we are reaching a state of balance. Here, when we take a position, we do so much more easily, and our win rate can significantly increase. The advice I have is to definitely use this method. It can truly increase your profitability and help you gain very good profits from the market. Thank you very much for being with me today. Don't forget to subscribe.